Hi, my name is Anubhav Srivastav and welcome to Business Brewery's segment on gold. We're talking about gold today because it's not because of gold, but because of what's happened in the equity markets, and everybody wants to hedge their bets. The reason they want to hedge their bets is because the last 1 year we've seen a lot of movement in equity markets where people have gained some and a lot of people have lost some. Or they've seen dead returns, right? Markets are flat. What do we do? And people have therefore started to look at real estate. This is something we have covered in the past segments. And now we're talking about gold. And more specifically, how can you invest in gold? The simplest way of course to invest in gold is to go and buy a bar from somebody. Well, that's an interesting way of investing in gold in a traditional way. You should be careful about what you're buying, who you're buying from, and so you have these card packed bars that you can get from people like MMTC PAM, which kind of hold value a little bit better than the guineas or the bars that you buy from your local jeweler. But today, more importantly, we're talking about the electronic forms of gold, and the reason is that electronic forms of gold are easily tradable. Right. This again means that we're not talking about e-gold, which is, you get a certificate in exchange for gold that somebody else holds. This is gold that you get in your name as a dematerialized tradable security. And the two most popular forms are the sovereign gold bonds and gold ETF. So let's tackle sovereign gold bonds first. So sovereign gold bonds are essentially lending to Government of India against a nominal price of gold. So you effectively buy X grams of gold, but you don't get the gold. You are told that based on the value of that gold, you will get two things. One is your principal back at the end of 8 years, and in the interim, you will be paid 2.5% interest per annum. This will be paid out to you in rupees. Right? The benefit is that at the end of 8 years, you will get complete capital gains tax exemption on it. That's again not a facility that is available in gold ETFs. Now, what are gold ETFs? Gold ETFs are basically mutual funds that are traded on the exchange, and instead of shares or bonds, you have physical gold bars that are lying in a vault against those units that are issued to you that you can trade on the exchange. The big advantage in both of these scenarios is that unlike physical gold, you do not pay GST, and wealth tax is not applicable to either of these scenarios. In any other scenario, if you hold gold, including the so-called e-gold, you will pay all of those things. They are subject to minimums. Now, the big advantage of sovereign gold bonds is that you also get the 2.5% interest per annum. The problem is that sovereign gold bonds are not very liquid. So in case you want to go sell them before the 8 years expiry, chances that you may not find too many buyers for it. The second disadvantage is that if you sell before those 8 years, you will also end up paying capital gains tax, much like gold ETFs. So unless you are very, very sure of holding it onto those sovereign gold bonds for 8 years, you should think about what you're investing into. Gold ETFs at that point in time are perhaps a better idea. Gold ETFs tend to be very liquid. Anytime that you want, you can go and sell the gold ETF on the exchange. Now, gold ETFs are not all equal. You must make sure that the gold ETF has enough holdings and enough liquidity on the exchange to do this. So these are the two most popular forms of investing electronically in gold. How much you should invest? Take the advice of your financial advisor on this, or do your own calculations. Typically, I can share that people have about 5 or 10% of their portfolio in gold. But again, this depends on what your portfolio is, in what are your other investments are, and how much of a hedge that you want to have in your portfolio. On that note, please share any comments or suggestions or questions that you have down in the comment section below. I'd be happy to answer them. Till next time, when we'll have another interesting asset class for you, and probably a special segment that is coming up on Women's Day. Have a happy weekend, and I will see you soon. Thank you.